What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking about a very interesting topic. First off, I wanted to give a shout out to Troy BR79 for the idea for this video. And this video is going to be all about dividends in the precious metal sector. Are they sustainable? Are they going to grow? And 5 companies that we might want to watch for dividends. So it's an interesting topic. If you guys like dividends, but you like growth investing, on top of that, you like hedge positions like precious metal mining stocks, then this could be the video for you. So hope you enjoy. Let's get straight into it, guys. Last but not least, if you do support me in the channel and all the videos, there's 2 quick things. Of course, that first thing is to explode that like button. It takes just 1 second every time, helps my video so very much. And I wanted to say 112 likes and 0 dislikes on yesterday's video. Thank you, guys. Second thing, if you do like videos like this, you appreciate these kinds of videos along with the interviews and everything else we do, of course, don't forget to catch that subscribe button and ring the market bell for notifications. So let's get straight into this video, guys. And I gotta say, I'm excited to talk about this topic because I feel like I have a lot to say. Now let's give you guys a few quick updates for the channel and what's going on. We will be dropping an update video on Else Nutrition and a CEO interview. We're doing that tomorrow. Today we're interviewing Bill Guy, chairman of Theta Gold Mines, and we're also interviewing Vahid Shababi, COO of Victory Square Technology. So we'll have lots more awesome interviews on the way. And last but not least, before we dive into comment of the day, guys, thank you so much for 200 subscribers on Departure Stocks. We're at 205 now. This channel is growing, faster than I thought, and I'm going to keep uploading the content. So if you haven't had a chance yet, check out the new channel. We've got 5 videos up there already. 3 stocks I keep buying, growth stocks, mining stocks. We're talking about a ton of different stocks along with viewer requested stocks. So I started compiling that list via the comments, so keep dropping your favorite stock tickers below in the comments, and I will be making videos, more and more videos for Departure Stocks, and it's more of an unedited, raw kind of live stream discussion with more opinions. So far it's been doing pretty good, guys. Thank you so much for supporting that new channel, and I will continue to pump out the content, and that's what I really like about it. I can just keep pumping out the content for that channel. So let's get straight into comment of the day today. First comment of the day has to go to Troy BR79. Like I said, I'd like to see a video on dividend paying mining stocks, and that's what today's video is going to be all about. So I am listening to the comments. I am doing my best to answer all the comments. I will get to these comments today, guys. I just didn't have a chance yet setting up for these 3 interviews today. Next comment of the day goes to Wolodek, Marzek, 1911 Gold, and Triumph Gold. And I'll have to take a look at those. Ed Woosley, XTGRF or Extra Gold went up 7% today. We're giving you a like. Yes, it did. And it's looking pretty nice. And then last comment of the day goes to Dave Davies, Agnico Eagle all the way. And I got to say, buddy, awesome mining jurisdictions for that stock. So let's get into the market recap, see what's going on Wall Street. We won't spend too much time on the market recap. I did want to spend a few minutes, though, on some articles from Kitco just to see what all the big financial institutions are saying about gold right now. We know gold is rising, so it's looking pretty good. And I was also looking at the charts yesterday, and I gotta say, the charts for gold, the longer term charts, are looking pretty awesome. So Wall Street slips as investors wait for stimulus deal. And yes, the markets are a little bit shaky, but gold, in fact, is running $19.28 per ounce now. Wall Street's main index is dipped in choppy trading on Wednesday as investors waited for progress on ongoing negotiations related to the whole stimulus deal. Larry Kudlow said, sunny and optimistic morning in terms of negotiations on a relief bill with White House representative Democratic leaders. So we'll see what happens, guys. Right now it's 1.8 trillion, while the Democrats want 2.2 trillion. So we'll see what they get. Either way, I think we're gonna get more stimulus. Pretty sure that's the only way out of this. And let's take a quick look at the gold charts. And there was a trend forming that I was looking at. I'm not an expert chart reader, and I've always said this, guys, but I was looking at the longer term charts for gold, and I gotta say, it's looking pretty awesome here. We can even relate this back to the start of 2020, before this whole global illness happened, before this whole crash. We saw some highs before we saw gold crash, but by the looks of it, guys, gold is resuming that trend, and it's bounced off that trend line a couple times already, and it looks like we could potentially be heading higher. So I'm looking for a breakout in the next couple of months, and I became more and more bullish on gold and silver over the past couple of weeks, just as I've seen this consolidation period happen. And there's been a lot of positives. So fingers crossed, nothing's for sure. But so far, looking pretty good for gold and silver. Same thing goes for silver, except for silver should climb at a higher trajectory. If we do, in fact, take a look at the charts from that March low back there. So let's try and paint this picture real quick. Zoom out just a little bit more. And you know, silver's different. Gold, you could paint that trend before the March crash, but I think really, you know, that March crash was what did it for silver. And like I said, we're going to see more volatility in silver than we are going to see in gold. But I think that we're also going to see more explosive gains for silver and all of the silver mining companies. So guys, let's see what Kitco has to say about gold. First, rising inflation will continue to push gold prices higher, Alex Merck. In a telephone interview with Alex Merck, president and CEO of Merck Investments, said that there are several important fundamental factors that drove gold prices to all-time highs above 2,000 an ounce. However, he remains bullish on gold as long-term inflation expectations move higher. We have a Fed that wants to increase inflation, and they are committed to keeping rates low. This means real interest rates are going to go down over time, which is an environment that is favorable for gold, and that's what people are embracing. If you believe that long-term rates will stay low but inflation will gradually tick up, the price of gold may be worth investing into. So I gotta agree with you. ABN AMRO, gold price to remain tethered to 1900 through fourth quarter. So we've got some conflicting opinions now. Let's see what they have to say. In a report published Wednesday, Georgette Bowell, senior precious metal strategist at AMB AMRO, said she expects to see lower gold price in the near term as the November date looms. She noted, with so much uncertainty ahead of the US big event, gold investors might be inclined to take some profits and hold some more cash. Net long positions in the futures market and the total outstanding ETF positions remain very large. In short, position liquidation risk is still there. So, a little conservative for my opinions, but we like to hear all the opinions. Major miners, El Dorado continues to outperform. We're not going to take a look at that article. And two more quick headlines, and then it's on to those 5 companies. And then that will be it for the video, guys. So gold to March higher, but record-breaking rally will slow. Gold will average less than $2,000 an ounce next year, a Reuters poll showed, as a record-breaking rally slows. Although prices are still expected to touch new highs, gold hit an all-time peak of $2,072 an ounce in August, around $1,300, from around $1,300 mid-2019, its fastest rally since the aftermath of the financial crisis a decade ago. This talks all about gold and why it's being pushed, but spot gold will average $1,780 an ounce this year and $1,965 an ounce in 2021. The medium forecast return by the poll of 42 analysts and traders showed. So that's not necessarily a bad thing. I'm more bullish on gold personally, much more bullish. I think we'll see $3,000 or $4,000 gold. I'm not, a $10,000 gold bug, but I do think that we will see much higher than that 1920 low, because we've never seen an environment like we're in right now. So I really feel a lot more bullish on gold, but I could be wrong. Now, at 1965 an ounce, guys, let's not forget a lot of these miners are, they were trying to position themselves to profit at $1,300 gold. So the large caps are going to make a ton of cash. The explorers, the juniors, they're all going to make money. So if we stay around 2,000 an ounce for next year, things are looking pretty good for the sector. And last but not least, gold traders would benefit from looking past the noise. This comes from TD Securities. Gold traders would benefit from looking past the noise. With this big event day only a few short weeks away, gold bugs need not look too far to expect a large-scale fiscal deal in the making. A blue wave at the pole is starting to get priced in, which is being reflected by the bear steeping on the treasury curve, weaker USD, and higher equities. We expect the yellow metal to perform as global reflation helps fuel weakness in the broad USD, while conversely, a more sustained rise in rates would likely push the Fed to increase the weighted average maturity of the Treasury purchases, which would help to suppress real yields once again. In this context, the balance of risks remain tilted to the upside for precious metals. The gold bug is well and alive. So guys, that's a few opinions on gold. Now let's take a look at some of the top paying dividend stocks in the mining sector. And dividends didn't really used to be a thing, but now that gold prices moved up so much and these producers that are making millions of ounces are now getting $1,900 and $2,000 an ounce versus $1,300, it's a lot different. So they're making a ton of cash, and these large cap mining stocks do have to hold and attract new investors, bigger funds, income investors. So Newmont Gold, that's my first one. Pays a 1.64% dividend yield, $65 billion market cap, and it's trading $16 off of its 52-week high. So looking at a major right now might not necessarily be a bad idea. I feel like a lot of these gold stocks, that initial rally, the market got a little bit ahead of itself and now we're pulling back. So a lot of these stocks, you're able to buy them 10, 20, even 30% off of their 52-week highs. So not a bad idea. Once again, not financial advice. Newmont has very diversified operations with mines in North, South America, Africa, Australia. So we're not going to get into the details here. I simply just want to talk about the companies, their dividend yields, and we're also going to talk about the sustainability of dividends in the precious metal sector. But first, I want to cover the companies. We're covering 3 large cap mining stocks and 2 metal streaming companies, large cap streaming companies. The next company is Wheaton Precious Metals, much lower yield at 0.82%. And a 52-week range of $18 to $57.88. This is traded on the NYSE along with all the other companies. All the other companies are on the major exchanges as well. The thing about Wheaton Precious Metals, it used to yield a lot more just a couple years ago. It traded around $19, $20 per share for such a long time. And I remember holding this stock in 2017, 2016 when the stock was yielding like 2 or 3%. It's a pretty good yield, but since it's moved up, share price really affects yield. So you get less shares per share, you get less shares, and that equates to, less shares paying out the same dividend, and you end up getting a lower yield. So you could say that the streaming business is a more diversified, more secure business, which is why the stock and the company yields less. As capital flows into the sector, we are going to see, higher yields on the riskier companies and lower yields on the safer companies. And if we take a look at their streams, they've got a ton of different streams, 20 operating mines, 9 development projects all across the world, and in very safe mining jurisdictions, North and South America, just a couple in Europe, none in Africa, not to discredit Africa whatsoever. Africa is a fantastic mining jurisdiction, but generally, we say that North and South America, or at least North America, tends to be a bit safer. That's it for Wheaton Precious. I want to talk about the next streamer, Franco-Nevada, and this stock has had a tremendous run from $100 to $222, $34 billion market cap compared to Wheaton Precious's $22 billion market cap. So both big companies. Franco-Nevada even pays a smaller yield. They do have a decent, diversification. And let's take a quick look at their mining assets. Latin America, Canada, the rest of the world, United States. You can take a look at all their mining jurisdictions, where they're in. But once again, a streamer, a diversified business. I think it's expensive right now. It's a little expensive, but they are, once again, a roughly 15-20% off their 52-week highs. So pretty much every stock we're going to take a look at has pulled back a little bit since that gold rally. Now, the fourth company we're taking a look at is Barrick Gold, the world's second largest gold producer, and not by much. I mean, Newmont's market cap of $65 billion, with Barrick's market cap of $63.98. They're neck and neck, guys. Barrick's yielding 1.19%. 52-week range is $17.52 to $41. Currently trading for $35. And don't forget, Buffett invested over $500 million into this company. So he's a dividend guy. So maybe he sees long-term potential for this company to pay dividends and raise their dividends, and also, appreciate, because these are the stocks and the companies that are making a killing right now because they're producing so much gold and capitalizing on the prices right now. So you can take a look at their operations. They are definitely a global company. A lot of gold producing assets in Africa, a couple in North America. Here we have some projects in South America, one project in closure, a couple copper producing projects. So it's always a good idea to take a look at the company's mix of assets. Highly recommend that. And if you're looking for sustainable yield versus high yield usually is riskier. So let's take a look at B2 Gold. And I saved this for last just to show you guys the difference between a mining stock that still is paying 2.27%. So B2 Gold is the highest yielding stock of the bunch. Smallest market cap, $6.17 billion, and the least diversified. So if we think about this, guys, comparing B2 Gold to Barrick Gold, B2 Gold, I do think that, their projects are in a little bit riskier mining jurisdictions. They're in the Philippines, Namibia, Burkina Faso, Mali, Colombia, Nicaragua, and Canada as well. But if we look at their producing assets, Nicaragua, Mali, development projects, Colombia, exploration projects, all across the world: Philippines, Burkina Faso, Namibia, and then of course the head office in Canada. We can see here that the company is in, technically on paper you could say, not as safe mining jurisdictions. So that's why I think this stock is yielding 2.27%. And now I just quickly want to talk to you guys about dividends in the precious metal sector before we dive into the charts. And then that will be it for the video, guys. So when it comes to my opinion on dividends in the precious metal sector, I definitely think that, we're at the start of something good. And I think, hopefully, fingers crossed, gold should be good for the next, I'm going to say 3 to 5 years. I'm going to stretch it. Before it was 2 to 3. Now I'm saying 3 to 5. And if gold stays between 1,800 and 2,000 over the next 5 years, we might see some dips, we might see some rallies. That's a very sustainable environment. And for big producers like this, they're going to continue to make a ton of cash, and they should be able to sustain and potentially even grow their dividends and their share price. So if you're looking for, a 3 to 5 year, potential 3 to 5 year plan, investing in some large cap diversified companies and collecting some yield along the way, I think the precious metal sector could be the next up and coming dividend sector, just for the amount of cash that these companies are going to generate. So correct me if I'm wrong, guys. I'd love to hear your opinion on this. What you think are the best gold and silver mining dividend stocks. Drop those comments below and let's get into the charts, and then that will be it for the video. But I got to say, I did really enjoy this topic, and I felt like I had an opinion on this, so it was fun. Thanks for that comment. So all right, guys, so let's take a look and see what's going on for the charts. So ACB is the biggest gainer on the day. What the heck's going on? Followed by 48 North and Tilray. Three biggest losers: Ignite, Oxley, and Namaste. And holy smokes, guys, Oxley's down 23%. What is going on there? Now let's take a look at the dividend sector, and we are seeing Sienna Senior Living, Severity Corporation, Brookfield Property Partners, and Northwest Healthcare Properties. Three biggest gainers, so the retirement homes are doing well. Brookfield Infrastructure, Renewable Partners, and Enbridge. Three biggest losers. Now let's take a look and see what's going on Tech Street. And we are in fact seeing Facebook, MindMed hitting fresh 52-week highs today again. Yes, this one is on the run. Tesla and Microsoft. Now we are getting Tesla earnings, so I might have to make a new video on the new channel about Tesla earnings. We'll see. We'll jump on that train. We'll probably do it, guys. Anyways, Virgin Galactic, Rockwell Medical, and Amazon, three biggest losers. And in terms of our broader 2020 watch list, Tilray, Direction, Daily, Junior Miner, Bull, JNUG, and Google, three biggest gainers. And Netflix, Beta Pro, Crude, or HOU, and C-Web in the red, three biggest losers. So guys, that's it for the video. I really enjoyed this topic once again. Feel free to drop, interesting topics like that. I read the comments, try to cater to you guys. So that's it. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.